Hello guys, welcome back to our YouTube channel. We trust you are great. Want to peek into the future of Forex and crypto? Who doesn't? The allure of predicting market movements and making informed decisions is something every trader dreams of. While we can't offer you a real crystal ball, those are surprisingly hard to code, we can give you the next best thing, candlestick patterns. These patterns are a form of technical analysis that can provide insights into market trends and potential price movements. These little guys are like the footprints of the market, giving you clues about where it's been and where it might be going. By studying these patterns, you can start to understand the psychology of the market and the behavior of traders. Now don't go quitting your day job just yet. While candlestick patterns can be incredibly insightful, they are not a guaranteed way to predict the future. They should be used in conjunction with other forms of analysis and risk management strategies. Candlestick patterns aren't foolproof, but they're a powerful tool in the arsenal of any trader from newbie to ninja. They can help you identify potential reversals, continuations, and other key market signals. Think of it like this. Imagine you're a detective investigating a crime against boredom, that is. Each candlestick pattern is a clue that can help you piece together the bigger picture of the market. Candlestick patterns are your fingerprints, your DNA evidence, your cryptic note from the kidnapper. Okay, maybe not that last one. They provide valuable information about the market's past behavior and potential future movements. They help you piece together the story of the market, understand the motives of buyers and sellers, and hopefully, make some smart trading decisions along the way. By analyzing these patterns, you can gain insights into market sentiment and make more informed trading choices. But before you can channel your inner Sherlock Holmes, you need to understand the basics. It's important to start with a solid foundation and learn the different types of candlestick patterns and what they signify. What are these candlestick things anyway? Candlestick charts are a type of financial chart used to describe price movements of a security, derivative, or currency. Each candlestick represents a specific time period and shows the open, high, low, and close prices for that period. How do you read them? Understanding the anatomy of a candlestick is crucial. The body of the candlestick represents the range between the opening and closing prices, while the wicks or shadows indicate the highest and lowest prices during the time period. And most importantly, will they help you finally buy that private island you've always dreamed of? No promises on that last one. While candlestick patterns can enhance your trading strategy, they are not a magic solution for instant wealth. Let's dive in, shall we? By learning to read and interpret candlestick patterns, you can start to make more informed trading decisions and potentially improve your trading performance. The world of candlestick patterns awaits. With practice and dedication, you can become proficient in using these patterns to navigate the complex world of trading. Okay, so maybe rocket science is a bit dramatic, but understanding candlesticks is like learning a new language. Luckily, it's a language with only a few basic characters. Let's break it down, shall we? First up, the body. This thick rectangle tells you the price range between the opening and closing prices of a specific time frame. Think of it as the main event, the meat of the sandwich, well, you get the idea. If the body is filled or black, it means the price went down during that time frame, a bearish signal. If it's empty or white, the price went up, a bullish signal. Next, we have the wicks. Those thin lines sticking out from the top and bottom of the body. They represent the high and low prices during that time. Sometimes they're long, sometimes they're short, and sometimes they're practically non-existent. It all depends on how much the price fluctuated, and that's it. Those are the basic building blocks of a candlestick. Now, you might be thinking, that's it? That's all there is to it? Well, yes and no. Understanding individual candlesticks is one thing, but the real magic happens when you start looking at them in patterns, like constellations in the night sky. These patterns can tell you a lot about market sentiment and potential future price movements. For instance, a series of bullish candlesticks might indicate a strong upward trend, while a mix of bearish and bullish candlesticks could suggest market indecision. But we'll get to that in a bit. For now, let's just appreciate the elegant simplicity of the candlestick. It's a thing of beauty, really. Each candlestick tells a story of market activity, capturing the emotions of traders and investors. The body and wicks together create a visual representation of the battle between buyers and sellers. When you start to see the bigger picture, you can make more informed trading decisions. So, while it might not be rocket science, understanding candlesticks is a crucial skill for any trader. And like any language, the more you practice, the more fluent you'll become. So keep studying those charts, and soon enough, you'll be reading them like a pro. Happy trading. To follow contents on Forex and crypto, kindly hit the subscribe button. Don't forget to hit the bell icon to get notified when we make new posts. Thank you. See you in the next one.